Hello traders, welcome to the live session beginning potentially big trading day, and with the NY session looking at the market from a different angle. We can see there was a significant breakup structure. If you look at, we have seen that after this initial bounce of this support level, there was a massive breakout here in that market, and with this breakout, what we have seen that past 2 days there was a breakup structure. Now in this session we are looking at trading opportunity in the market. The volatility is at the peak. If you guys look at that, you can see there was significantly strong move that we have seen earlier. By the way, let me know guys if you can hear and the stream is on. Hope that everything is going well, and let's look at this analysis today on gold, and also was looking at BTC USD to see that what kind of trading opportunity it is arising. So that being said, starting potentially a big trading day, as Friday and Monday are two best day to trade. We had yesterday two massive winning trade in this live session. I believe you guys also enjoyed those trade. Now looking at today's as well in this market to find potential entry, and we will be looking at both BTC USD as well as on XAUUSD. Now first of all, looking at gold to see that where the market is currently heading to, and looking at XAUUSD, if you look at the daily chart here, there was significant breakup structure on the daily that we have seen earlier of this key level of resistance, and with that breakup from this key level, the market had entirely broken back below of this key level. And from the longer term picture that we can see on gold, that is on XAUUSD, looking at first of all the daily chart here, as you can see the market has created a new all-time high. That previous daily price action of that all-time high from 5598, that means from 5600, which is an all-time high, and the market of this 5600 entirely has broken down of this resistance line. Now this is a entire breakup structure that you can see earlier, and today the market also, after the previous daily doji on this, we can see the market has entirely broken out of that structure. With that break, currently what we can see that today's price of this resistance line, the market has shown that there is an initial break below the price. If you look at the daily in 2 days from this resistance line have shown significant volatility. The market has entirely broken back below to this support level, and with that break, if you look at here from this daily level, the market has shown that there is a stronger rejection of this key level from this 5600 level. And now today's market, if you look at after opening the previous daily, the price has entirely broken back below from this level. Now with that breakdown, what we are expecting here guys is that the market to eventually, what I think today, as the market trend continue, we could see that eventually the price to continue to drop. Do you think so? I'm going to start a poll Now before I progress further, make sure you like this stream if you like, and also don't forget to subscribe to the channel if you haven't done yet. So looking at from that point of view, if you look at from this high here, there is a significant breakup structure, and with that breakup structure on gold, now any pullback, if you look at the daily, that any pullback is where looking at potential entry. Now looking at the 4-hour chart, that if you look at from this high, okay, so with this high here, entire a breakup structure. From this high, there was a straight drop back to this support level on gold, and with that break below to this support, the market slowly trying to show an upside bias here. And with that upside bias, we might see that the market to what I think that to fill that imbalance, to fill that zone here. At the same time, the trend is down, right? And with the downtrend, we will be looking for now selling opportunity. You guys can see that in just a matter of a day, we have seen that there was an uptrend. Now the trend changes to a downtrend. Good day. Thanks for joining. And make sure also you like this stream. When you like, YouTube algorithm shows it to more, and that's helpful. Now, before we enter, we do open quite a few positions. Earlier also we had opened a sell trade in the academy in this level, and that was a massive winner if you guys looked at. I'm going to also explain that in depth of this trade entry. In this area we have sold XAUUSD, and that was a massive winning trade, along with also the previous win that we had previous daily. If you look at our previous NY session trade yesterday, we had 2 entry at a time. Now what we are looking here at the moment, again another entry opportunity. This is our job as a trader, right? Look for an entry, get into the trade, do the risk management, and then repeat, right? Repeating is the key. Anything you'll repeat, you started to see more and more. This is how the human brain is designed. If you guys want to master anything, you see that the kids, smaller kids, they just absorb in one go. For adult, if you look at our brain, so the brain has, if you look at, because this is a great way to understand how a trader can learn trading very easily. Okay guys, so pay attention here, it's very important. If you look at that kids, okay, the smaller kids, if you look at up to 6 years, their brain wave remains on. So if you look at, we have a brain that has a wave, okay, so alpha, right, theta, first delta, up to 2 years, they're like a deep sleep, and then goes to the theta. After 2 years, it's like a dream for them, and then coming to an alpha, which is the creative brainwave, right, which is the most learning. And when we get adult, above 7 years, everything becomes like what first 7 years has learned and gone through, right? In the past, people believe that you can't change anything after that, but now you can change everything. You can rewrite everything. You can reprogram everything like a child, because the only thing that you need to make sure that you can slow down your brainwave to be alpha. And when you can slow down your brainwave to be alpha, you can become like a kid, and you can rewrite, relearn, re-understand everything. And that's a great way, because as a human being, if you're living in this world, you grow up, no one has control over how we, where you grow up, where you're born, but you have control over how we can change in the next step, in the next future. So this is a great way to change that one. Now, if you look at that, the two way you can learn that, one is changing the brainwave to the alpha. The other one, even if you are not changing the brainwave to the alpha, because in adult, the brainwave, most of the time when you are thinking, you are analyzing, it's on a beta level. That means analytical thinking. Repetition, okay? So when you repeat, it's gonna straight goes to, you know, create that neuro pathway that you need to rebuild and redo over and over again. So repetition is the key, right? Now the same thing, trading, repetition, the same setup, same strategy over and over again, that will where your brain create the neuro pathway that you need so that you can see that in autopilot. Okay, imagine that the mostly the brain works, it's called the reticular activating system. That means anything you repetitively see, do, either real or anything, you're gonna see it more and more, because that's how, if you look at, you know, this, in this entire cosmos, in your surroundings, there is infinite number of information to pay attention. You can't pay all of that, right? Because your attention is limited. So we pay attention what confirms our existing understanding that makes sense to us, and that is based on your belief and conviction that creates the reticular activating systems program. And that you can do through learning, repeating same strategy, same setup over and over again, right? It's boring, but this is how trading is. Same setup, same thing over and over again. And this is what we will be doing here. The same kind of setup, same strategy, repeating over and over again, and then scale it up like that. Okay, now if you look at gold, that you can see the market drop, and we have our previous trade exactly to that point. The market has dropped off that level, straight come back below. Now the market again, we can see there is another bounce here. Now this is currently, if you look at the 5 minute chart, there is a crossover of 10 and 20 MA. So that means there might be some upside here. By the way, this is our trade entry engine for our, if you look at, this is accessible by you. This trade entry engine, which is the best strategy now, this engine is providing me now up-to-date trade alert, including entry, stop loss, and take profit, and it must be used with proper risk management. If you are our member, you can access this from TradingView platform, and also you have other version even for auto trading. This is 2026, and we are going to 2027 and beyond, and we need to upgrade our skill, right? Simple but easy. The only thing that you need to make sure, guys, is that you keep your mind open for the new upgrade, right? Now, learning is the first part. Learning is the first part. The foundation. This is what we are learning in this live session, that how trading works, the foundation. Okay, and then powered by additional tool, indicator, system. All right, too much retracement done. Now gold will start its journey back to moon. Okay, so let me see what you have just said. Let me look at here weekly. Okay, there is a possibility, because the weekly market just been tested. Now if this weekly support, if you look at, right now, if you look at here, you can see that this is a support, weekly support, and the market has broken that weekly low and bouncing back to the upside, right, in that area. All right, so with that bounce back to the upside on gold, if you look at the weekly market structure of this support, now there are two potential scenarios. If this market bounce off, we'll be looking at the lower time frame, what criteria you can use for bouncing off this level, right? If you look at this support of this, we could see that the market going back again, new all-time high. There is another possibility that entirely break below. Now, if this weekly, because today is the last day of trading, you guys, if this, it is less likely that the market will entirely break below, because a trend is not built in one day. It's not gonna break also in one day. Therefore, as a short-term trader, where you are looking at now, because there is a bounce at the moment, we can see some kind of upside. But what I think, there could be multiple retest of this support, because there has been significant rejection of this key resistance line, and there might be multiple retest. If we look at that perspective now, the market is slowly trying to push that back to the upside here. Yeah, there is a very high chance for another wave of bounce. Okay, now let's see that how that can happen. One thing that we need to look at, this is the 4-hour long wick, right? It's a significant rejection, but it's almost 1766 pip week only. It's a massive volatility. And what I think, that the market may not straight bounce off this level without filling or retesting at least major portion of this long week, because this is a long week, right? This is a long week. So therefore, okay, now with this pretty bigger move, this is the all those green candle, a straight bounce back to the upside here, and that, if you look at that bearish move, there is a higher possibility that there could be further downside here in this market, and I think it is less likely that the market will straight being able to go straight back above here for a new higher high. Now, because the market trend is still, if you look at this lower time frame here, if it breaks down, it might straight drop well below again to the order block. Okay, here if it shows a very significant downtrend, we will be looking for sell, because though daily trend is still maintaining bullish, but if you look at the 1 hour and the 4-hour trend, it's now bearish here. Therefore, with that bearish trend, chances for this market to come down is higher. Though we see there is an organized uptrend here, Okay, we can see some kind of bearish price action has been formed here, and with that break below, the trend is continuing here as a downtrend. There is a chance for a downside here. Okay, so looking to see that where eventually the market structure is building its momentum, and with that market structure formation of this support here, we can see the market is now trying to create an upside bias here in that area. And from the 4-hour chart, that you can see the market trying to break below here. Now there is as I mentioned, there is a significant imbalance here in that area. So if you look at, this is the 4-hour long wick, right? And that long wick could eventually fill that. Now it's still in a local downtrend, so therefore we will be looking at potentially selling in this market after proper price action confirmation. There might be an upside here. We'll be waiting for the market to properly, the reason I'm saying properly is because there are quite a few imbalance to the upside. Here locally we can see there is potential for downtrend. Now some of you probably expecting to go up. Are you anyone storm coming? Hello, welcome. From where should we see buy? Now I'm not looking at buy at the moment. Anyone thinking that buy? Anyone on buy side? I think that's currently significantly bearish here. Anyone thinking of buy? I think we can take at discounted price. Sell. Sold to 5015. The market structure, this is currently still showing selling pressure. Okay, now because if you look at the health of those red candles, will tell you that actually who is in control. Except here we saw some kind of move. Now usually if this kind of market wants to reverse, that means wants to go higher, it needs to create a double bottom okay, it requires to test this support few more times. And because after this, we are looking at the 30 minutes on gold. This red move, you can see it's a full body candle which had a volume in that movement below, and then followed by we see that a few, that means an hour or so, was strong bull. So it is one confluence that there has been some buying pressure has come. That means from this, okay, from this high that we can see 5137, less likely that it's gonna straight drop. Instead, now we could see that the market to have an upside bias, and that level stream lagging. On my side, I'm in a very high speed internet. Anyone has the same issue? Anyone has lagging? Anyone has lagging? Yes, can let me know if you think that it's lagging with you. Okay. Yeah, because thank you. In my side, it's very I use a very super speed, like can't be more than that usually in a regular situation. Okay, anyway, let's get back to it. Now you can see that there is an upside bias here. The market is slowly pushing that back above with this movement. Now what we are looking at in this support, the market to slowly create an upside movement, a breakout, and you can see it's going up. Now, as I mentioned earlier, my bias here is to this level, okay, which is key level. So if you look at the 4 hour, let me delete those lines again. There is always fresh perspective. Looking at fresh perspective is the key. Okay, so if you look at here and also the here, so these are the key levels that I'm looking at. Especially there is a rejection of this, chances for this market to go up to this 5185 and around this area is key. Because if you look at, if the market goes back to 5185, you see this is the 1 hour candle and there's a gap open, and this is a 10 EMA. It's a high liquidity zone. The price moves from liquidity to liquidity. So therefore, expecting the market to respect that level, reject of this after grabbing the liquidity, we are looking at that level. Okay, quite a few long week candles and got the rejection back above. are going to look at the big amount of PEEP with this volatility. Yes, currently the market is pretty volatile. If you look at past few trades that we have opened, yesterday we had one 270 PEEP, the other one 160 PEEP in this live session, and today we had one 55 PEEP, I think 50 PEEP or 55 PEEP. Now looking forward to see that similar kind of setup again in this live session. Yes, I'm looking at, because when there's a higher volatility, the number of PEEP that we can look at is higher. Now also, you know, most traders that I have seen that trade blindly, right? Trade blindly, okay? Don't trade blindly. This is a very good question, okay? Are you looking for a big amount of PEEPs with this volatility? Always keep eye on the volatility, because you know, as a trader, if you look at only, you know, what is a pin bar, only price action, only technical, that's not gonna give you the clear picture in the market. Because look at the 1 minute chart and look at the ATR here. That will tell you a lot of stories. So if you don't know ATR, let me know, I can discuss more. ATR is average true range. So if you do 94 pip on 1 minute, the volatility now at the moment. Now let's go back to some past. Okay, so that will give you better understanding. We look at just few days back. It's on 26th of January, average volatility 41 pip. Going back further, not very long. If you look at the 26th January, let's go back further. So you're going to, this is on average volatility. On 26th of January, usually, you know, some high and low, but we can see that around, let's see if you look at the average, 25, 24 PEEP ATR on 1 minute. Now, what does that tell is that there is almost double, triple, you see how the indicator has changed its value. So higher volatility, what does that signal? Have an idea? Like what this ATR, I don't know how many of you know, there is another indicator called ADX, I think ADR or ADX. Average directional index, ADX, ADI. So that normally gives you the strength of the trend. So now this one, the ATR, is mainly will tell you the volatility, because understanding ATR, the only way, you know, as a trader, when you look at our blank eye, that is sometimes difficult to distinguish that how the market, in fact, the volatility is in the market. I'm not sure if you guys have read the report recently. In Q4, okay, 2025, there was a record volume of CFD trading volume, right? So it's picking up. Now that means there has been a lot of supply and demand around that time, and it's in blank eye looks like that, okay, you know, how much trading volume coming and how many traders really. So this is another sign of why does trading volume increase that much? Because people are trading, right? So from I think 1.24 trillion to increase to nearly to 2 point something trillion. I can't exactly, I don't know the figure. So that is a transition of coming people like you and me being interested in trading, right? So it's a trend. It's going up. You see CFD volume has risen that much. So that means, and you can see the reflection on the chart, there is a higher volatility. So it's a good time to trade. So what does that mean is that when there is a high level of supply and demand, there is a high level of volatility in the market. So why should you miss that? Take your trading to the next level by learning and growing as a trader. Usually, have you ever seen that something has had a trend and just changed and forever gone down? No. What is going up is likely to go up. So it is, right? If you look at the internet, computer, they're always going up, evolving, updating, upgrading. So prepare yourself for 2026, 2027 by learning, growing as a trader. Look at the long-term picture always. Look at the bigger picture. Look at 5 years, 10 years. Why not? Right? If you're doing a 9 to 5, you can do that too. But, going to the school, finish 10 years and then going for another 4 years. And then another 2 years, get a graduation, and then go to the workplace for experience for another 4 years, 5 years, and just make a living or sometimes struggle. I know people who, started with me and changed their job maybe 10 times, 15 times, and it keep changing still. So when you have something beside you that you can scale up, that you can learn skills, this will give you additional edge, additional strength. And now in 2026, it's going to be 2027 soon and beyond, trading can be attractive for every traders who want to be a trader. So learn and grow as a trader by learning to trade. Focus on learning. The rest is later. All right. So that being said, let's look at now again in the market how we can trade here on the lower time frame. So that's where you can see this is the 4-hour chart here, where the market, if you look at this is the resistance line, the market could, the 4-hour time frame that you can see, the market may eventually break that low here. So here we are on a downtrend, and I'm looking at that market structure here for another drop down. So with this break, if you look at here, after breaking this high, we see the price slowly started to drop down, started to break below here. And that might bring that market back to this intraday support. All right, so with this breakout that you can see the market slowly breaking below again. Now in this zone now, once we see that significant downtrending market structure, we are looking for sell, right? We will be looking to sell here as the market is showing that there is significant amount of bearish price action, but it's still not entry yet. It's a plan. Always plan, trade your plan and plan your trade all together. That will give you better control over your trading. Yesterday's the buyers were taken out of the market. Today's sellers will be taken out. Well, there was a significant drop here, right? Now, I think it's still there is a potential for some kind of downside. Now, what others are thinking? Let's just start a poll. If you guys looked at, there was a really strength in poll, so I'm starting a poll here to see what do you think that today the market is going to be. So let's look at the daily levels here. So this is the daily resistance, and $5356. Do you think gold is going to go there? Let's just start a pool. So I've shared a pool here. You guys cast a vote. That's gonna give you a better understanding of what direction the market might be going today. Okay, so we have news at 7 p.m. So news on, yeah, today's there is. Let's keep that little bit on the attention. Okay, so we are having coming up in just a matter of an hour, GDP on CAD, core PPI and PPI. So the forecast this time is 0.2%. Okay, so there are some high impact earlier. So there's a new feature. Okay. And looking at here on now, in just a matter of an hour coming up, GDP on CAD and core PPI. So two high impact news. And this is the Friday is very different than any other day. Do you think so? By the way, guys, if you're enjoying the live session, make sure you like this stream, subscribe to the channel. You can find link below this video for the Telegram. You can stay connected. I do share many of the updates that instantly will improve your trading, no doubt about it. The started buyers were taken. Okay, smart money will definitely enter at discounted price. If you look at the smart money trading very different than what we think as a retail trader. Thank you. We'll be discussing about how smart money trade and how as a retail trader we understand it so that we can follow. There's a very different trading system for the smart money and the retail money. Okay, now with the smart money trading, once you know how they trade, then you can follow them. I don't want to compete with the smart money. That's a smart way to trade. You can follow the smart money. We'll be discussing in this live session how you can take the flow. Okay, so I consider it like a big ocean, right? So it's a big ocean where there is plenty of water, which is the liquid, and now the smart money is, what's that, a whale, right? Big whale. So as a retail trader, the small fish was the best way to swim there. Just follow them. They will create a pathway and you can follow, and that's the best way to trade as a retail trader. So we'll be discussing on how the smart money trades, how you can take that in your trading. By the way, we can see some rejection of this level. There is a chance for potentially a downside here. Let's wait to see that if the market is trending. Now smart money definitely now in the market. Now why? Because without a smart money, the market will not show that much of volatility. Do you know that? If all retail traders open trade at the same time in the same direction, still the market will not move. It's an interesting fact. So retail trading volume is very smaller, but when you can trade with the smart money, you can see that your trade will go always, most of the time, and you stay in the winning side. Okay, now here, what we are looking to see, the market started to trend back down here. Okay. It left an imbalance in that direction here. Okay, so this is the 30 minutes price action. If you look at the 1 hour, we can see the same. Okay, there is an imbalance here that you can see. We might be able to enter a sell trade shortly. I'm preparing for it, but still not entering. Okay, getting some bearish price action here in that area. Here, if we look for any entry, it's pretty stronger volatility in this market. So I'm still not being impressed for further drop. I think it may start to drop off this, but the best level to look for sell will be around 5180, guys. This is where I want to enter, because this market created imbalance here. It might come to feel that, or it may bounce back here. 5181 level. And I'm looking at that level for an entry, 5181, around that area. Thank you. Now, as we discuss about the smart money trading, it's important that you always look at what the institutional trader uses in trading. Firstly, as a retail trader, guys, keep in mind that this is the real information, right? You'll not find mostly very rare, because I had a very rare experience of learning from someone who experienced trading from the back end for an extended period of time. This is where the real trading happens. Okay, now that's why you'll see that. Firstly, if you look at smart money trading, one of the biggest challenge for the smart money is to fill their order. If you look at, as a retail trader, we have that advantage, guys. Technical analysis, everyone understand, right? Everyone understand the technical analysis. You, me, everyone. Smart money are smarter. They have resources, tools, analyze the market. The biggest challenge for the smart money is to fill their order in time and place, because if you look at here, if I am a smart money trader, if I want to buy here, I'm not going to be able to do the full order, because as soon as I will try to buy, the market will fly back to the upside and it's no longer be profitable to buy anymore. So how do they trade? They have to guess the move before it moves so that their order fill. You don't have to guess the move before it moves. So this is the biggest advantage of becoming a retail trader, that you can look at the price action and it's predictable. So the disadvantage the retail trader has is that you are alone, right, in most of the time, making your trading decision and being emotional about it. And that's why the community will help you guys. Keep in mind that you don't have to, use every detail from the community, because if you're a serious trader, then if you're with the community, have an understanding of what others are doing. We have a chat group also that you guys can join there, discuss, share. Then you stay in the zone. You know that what's happening in the market. And that's the biggest advantage that you can have as a retail trader. Tools available, simple. If you look at our current, you see that both of these tools are working well. This one, sell trade shown here on the 30 minutes, and is still running in that direction. We have entered sell, but will later we secured that trade here. Now, the only thing that as a retail trader need to care is risk management and sticking to trading for long enough to learn and grow as a trader. Okay, now going here in that area. So with the pool that I'm waiting for, also you have in just a matter of an hour, there is a high impact news coming. I'm looking for entry. By the way, guys, if you haven't cast a vote, you can share your opinion about the upcoming potential trend. And I say that so far 63% showing up to be bearish. All right, so let's look at here. And here is the market slowly turning that pressure back. 5180 is where I'm looking at. Now the previous trade that we have opened also, it's always, this is exactly where we have entered our previous trade, right? This is where the levels that we have entered. And I think the market is potentially to retest that level. Now this is the London session trade that we have been able to successfully execute, and we have taken the profit out of this trade. Now if you look at that, the entry, right, what did I looked at? I have already shared in detailed explanation in the group. If you haven't checked it out, highly encourage you to join even the free Telegram. I have shared some of the ideas, and also so free Telegram here. Now this is where 5180, this is the level, the key resistance line. And when the market was in a downtrend here in that area, we saw there is a pullback, and then there is another drop, and then pullback, and we can see back to back important resistance line here on XAUUSD has created this double top. And with the double top formation on XAUUSD, when the candle closed in the 1 hour, as the trend is down, and we saw there was a candle close on the 1 hour, and we have entered the sell trade. The sell trade that straight drop back below here, and that was a significant move from that level that you have entered the trade. So understanding that the trend, right, is the key. When to enter when the market is trending, and how to find in fact the trade that overextended. Guys, this is key. If you look at, if you have a lock, then definitely this is key. If you look at here, you can see this is a trend creating series of lower high and lower low. Now see how the market gives you entry. Now in this trend, it is expected that this market to create series of lower high and lower low, which is an ideal scenario of the trend. Okay, series of lower high and lower low. So if you look at here, series of lower high and lower low. Now at some point the market has broken from that structure. That series of higher low is broken, series of lower high. So when the market breaks this swing high, it creates an imbalance in that trend. That's where the entry. Simple. Break of structure will always give you a better understanding about the market structure. Okay, here the market, if you look at, it's forming quite a few long wick candlestick pattern here, and with this long wick candlestick, if you look at it's getting rejection of this level can bring that market well below here in that direction to the support level. I'm targeting 5050 level, thought soon it. Now I'm targeting 5050 level, thought on it. Okay. Now this market, if you look at, this is a consolidation here, right? And you see this is, oh, this is what we discussed, that's what you need to look at. A drop and then break up that, you see, break up that high, overextension and rejection back below. So this is a great example. This is what I was talking about in a few minutes ago, to create, you know, what it's called the recreating, or whatever, so that, come on, reprogramming the reticular activating system, reprogramming the brain to see this kind of pattern. All right. So now this is something, if you look at that, you won't be able to see ever or even predict until it form. So see this here in that area. Look at this box here. And with this box, the market is maintaining that series of lower high and a breakup structure of this trend line. And then with one single drop, bounce back up, cross that, and then rejected back below, straight drop. Now, so far here, it's showing that from this level downside. But as we plan that we want to see the market to go back to this key level, okay, from the 30 minutes. If you look at, if we see the market sentiment changes abruptly, we will be looking at entry even along this area. Planning a trade is key. And, you know, more often you know also will miss a lot of trades. That's fine, because the market really, if you look at, you know, from this zone, if you want to look at, you will find even any strategy that you are using, you'll find a lot of trades, and you don't have to take all of them. This is another important point. You don't have to take all the trade that you can see. But when you take, you need to make sure that you tick all the boxes. That's where the secret. you need to, you can let go 4 trade out of 5, but the one that you will be opening, you can make sure that you are putting tick in all those boxes, and that is where you started to learn, because the market will keep giving you a lot of trades. Some of the trade that you can see as per the engine, if you look at the 5 minutes here as well. Now in this area, multiple times the market tested those levels, so slowly it's potentially creating a downside momentum here. Now this trend line is being, we see that the price is rejecting off that trend line, that might take that market back below in that direction. I mean, head and shoulder on 15 minutes. Good day to everyone. Is it possible to reach 5300 level? 5300. So far the market is in a bearish move. I think we could see a further downside potentially. Let's see that what happened. Looks forming flag pattern. Given here, this is more of reversal rather than flag pattern. What I think that this is kind of reversal pattern. If you look at here, you can see one time the market drop and bounce, and again created multiple rejection and coming down back below again. That might take that market back below here. I mean, head and shoulder on 15 minutes. Still not completed. This is a bearish price action here in that area, but if you look at the head and shoulder, then it has to have another green candle in that area. There is no green candle yet, but the market trend that you can see here is bearish, that you can see in this zone. Okay, with this breakup structure, it started to trend down here. Welcome. If you are new here, then I'm sure that you'll enjoy. We do definitely trade. If you look at the past record, we had yesterday 160 pip in this live session, 270 pip, 2 trades that we have opened yesterday. Today also we are looking at entry. If you're new, make sure always if you open trade, then definitely use risk management, okay, which is the key. Risk management is very important. Let's keep in mind that. And use the lot size calculator. Okay, here the market trend showing bearish that you can see in this area. Okay, as you mentioned that it's a reversal and breaking below. Now for us to, now the trend has started to change. So it changes now to a downtrend. There is a, if you look at this, is the whole zone is a void up to this level, right? And if the waterfall comes here, 1358 pip. Okay, now if the market create a structure here, that means that clean bearish market structure, we will be looking for sell. Patience is key, and also risk management. I'm not new to trading, but I'm new to the channel. But thanks for, welcome. That's good to hear that, you know, having some experience is important. We do have, you know, in this channel, I have traders who, you know, start trade when we begin trading. Having some experience is the best, what's the asset you have, because beginner trader, one of the, you know, like the worst thing happen is learning curve, especially in the beginning. So if you have experience, definitely you know that how it likes to be a beginner. But nothing can become experience until you begin, right? This is where the thing is. You have to begin to become experienced. And but once you become experienced, once you know that what in fact creates all the difficulty in trading, especially if you look at the emotional component, that means that's trading psychology, and then the technical part, and also the fundamental. Fundamental is, if you look at that, ignored by many traders. Now, fundamental consists of core PPI, CPI, NFP. Not only that, but also the event, global event are part of fundamental, because they are the primary indicator of volatility. For example, if you know that there is something going to happen in next hour, more often, if it is a very big event, that means something economic downturn or anything, you can expect gold to become extremely volatile, more often spike. So that can give you understanding on either to open, trade, close, or manage. Would they kindly repeat what you said some time ago about letting go the desire to make money? Forex. Here you can see the candle close back below, and support and resistance in that area. Okay, I'm thinking for potential entry. First let it settle down here in that area, and then we might see pullback. I think there is a higher chance for drop down. And okay, here I'll be using, it might go up further for deeper pullback, but I'll be using a pending order. If the market breaks below, that's where I want to get in the trade after extend below of this swing low, keeping stop loss above this high. This is a significant volatility. If you look at the 1 minute chart that I'm looking at, 340 stop loss. So we need to look at that we have enough equity requirement here. It's a sell stop, so it's a pending order. We'll be using the sell stop if the market breaks that low. So it's a little bigger stop loss, as we mentioned, because of the higher volatility. So it's not suitable for a very smaller account. In that case, you can use a demo account for learning purpose. Make sure you manage the risk. If the market breaks below here, then you want to get in the trade of this support, and it's a sell stop pending order. If trade triggers, you will be entering into the trade, or you will be waiting for the market to show up. So I placed a pending order here, sell stop, and I'm sharing the same trade. And okay, it can still break back to the upside. If it breaks back to the upside at the moment, not looking at entry. Good day, coach. Kindly repeat what you said. That you want to be letting go the desire to make money. So if you let go of the desire to make profit, then you're gonna lose motivation of trading, right? You need to make money to remain motivated. It's the way it works is, what happen is that anything, everything that we do, there is an emotional component to it, right? So so there is, let's say as a human being, we stand here and everything we think and do has an emotional relationship to it, right? For example, you play, for example, soccer, and there's an emotional relationship to you to the soccer. With a family member also, you have an emotional relationship to it. Either it's this way or that way. Money also, you have a emotional relationship to it, and that relationship dictates that how it will manifest in your life. But you have to have that desire to grow as a trader, right? Then you have the motivation to do that. There is always two sides in everything. If you look at completely like everyone thinks that materialistic point of view, and also there is a emotional point of view, right? Either science or philosophy or anything. Now look at from the brain perspective, okay? Because this is the physical thing that everyone can see and can touch and can look at the brain. So the brain has a very interesting way that it operates. That's true, that it's all is so common. Okay, so to be successful, okay, always let me tell you the fact. Our brain doesn't understand what is money. It only thinks in terms of what you are, like you directed to, right? Which way you are directed to and why. So that's why is very important. You'll see that everything we say, do, act, there is a why behind it. Either you know or you don't know, and that why is important. So when you redirect to with a why, you don't have to be very selfless, and you can be why centered to your personal need, right? Can be, because so when you center to that why, then whenever you try to do something, it takes a little bit of time. So that why can drive you towards it. That's only the way to go towards it. Because that why will generate also counter emotion. Let's say you want to go for a run, okay? You want to do a 2-kilometer race in a run with your friend or anyone. Now, in the meantime, guys, we place the sell stop here. It's a pending order, expecting it to break below. Now, you'll see that after running 500 meter, you might get tired and you quit. This is so difficult. But imagine that someone told you over and over again, you are weak, you can't do that, and you got internally very upset about it, and you think that, okay, I'm gonna prove that I can do that, and you see it over and over again, and that creates a kind of emotion, that the emotion of fear you can overcome through that. So emotion of fear is that, okay, it's gonna be very hard, I'm fearful about it. But once you create a counter emotion that will override that emotion of fear, then you can drive towards it. So that why we'll create the counter emotion that will keep you moving towards it, like that. Okay, so the sell stop we have placed here. Now we are looking at the break below, and as soon as it breaks below, we'll be looking at that one here. Okay guys, I hope that you're enjoying the live session. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I am posting every day. We have very tight stop loss here. Okay, and therefore breaking below, as soon as it drop here with a single move, we'll be taking profit with significant move, and I'm ready to take profit as soon as it will drop. And I will give a shout out. I think if the market breaks below, it might boom, like it might just keep down here. That's what we'll be looking at. It didn't trigger yet. It's trying to push back to the upside. Very interestingly, from this double bottom, it's bounced back to the upside here, and if we reject from here, head and shoulder will be completed. I mean in that direction, yeah. If it breaks below here and then form like that, it's gonna create. But more important to look at rather than head and shoulder is head and shoulder is important when we see the market has in fact created that pattern. But the key here is to look at, if you look at this swing high is the most important. So this swing high has, if you look at break of that swing high, and now if the market reject of that, that means this green candle that you can see is an overextension above, and that's where the liquidity sweep, that's where the liquidity gap. And if the market is not trending to the upside here, breaking below, that means it has enough liquidity. If it bounce back, that might be signaling that trend again back to the upside here. The 15 is head and shoulder, 15 minutes head and shoulder. Okay, let's see. Yeah, 15 minutes time frame is so far bearish. Okay, there is a, I would say that 60% probability to come down here, or even coming down here. 60%. Now probability is important, guys. Keep in mind, probability doesn't guarantee, but whenever it comes down to probability, that means you are looking at many trades, not one trade. Because we more often, as I mentioned in the beginning, the brain is very important. We wired due to the, every day, because anything we do, in fact, it reflect in one area to the other area. What do I mean by this? If you look at, for example, you go to the park and sitting down on a bench for an hour without anything, that might improve your trading. Because one thing that you do in one area will reflect in the other area. That's how the brain works. So the probability works in the same way. Now, if you look at the probability and certainty, right? Probability means that 60% probability means if you take 100 trade, not always, but let's say 5,000 trade that you took. In 5,000 trade, if you take the first 100 trade, it might be that you have lost 80 trades. You win 20 trades, but the probability is 60%. How can that be? Right? That's what it is. But when you look at a large number, it gives you a results of higher percentage. So that is probability. That means in probability, there is the component of winning trade and also losing trade. So when you think in terms of probability, that's where you develop a mindset of a trader. It's very important. And it's simple. Just make sure that you're managing your risk and not being centered on one trade, but look at a large number of trades that you can execute in the same setup. Okay, it's still not breaking below. I'm still leaving that sell stop here. There's a potential for break below, and there is a news coming in 20 minutes. So in the next 10 minutes, if the trade not getting triggered, if the market going up, we'll be closing the pending order. We'll be waiting for the entry to come up. How can you practice on getting the perfect entry? There is no perfect entry. In fact, there's no such thing as perfect in this whole universe. In fact, what can you find that is perfect? Right? So the entry, you won't find a perfect entry. And the only thing that you can find is an entry that brings you the higher probability. We are looking to see that break below here, and we still have 15 minutes for this. This is the 15 minutes, and the next candle is forming. The next one with the next one will bring news, right? So waiting for this candle to close and to continue to drop. If it drops, then we might see before the news a significant drop. If it bounces back up, we might see that upside, and I think there is a higher chance for breaking below. The market structure here became pretty fragile, but I'm not being very too confident that entering sell from here. You want to see the market to break that low. Being confident in trading is very different than being confident in anything else. Being confident in trading doesn't mean that you guarantee the market will move that way, but you guarantee that whatever the market moves, your setup is fully managed and you did according to your setup. Right? That is confidence in trading. All right, so here you can see the market. This is a bearish setup now. Okay, so with that bearish setup, expecting it to break below here, as there's a 15-minute candle close coming. You see back-to-back 4 narrow, smaller candle rejected off this trend line on the 1-minute chart. So there is a chance for breaking below, and the sell stop is here and waiting for the market to trigger. Okay, so far we see there is a potential for downside here, and okay, ready for that potential entry. Still not triggered for a peep, waiting for the market to drop. I think there is a new Fed just been okay, here with this support it's moving back up, and we still didn't trigger. If the market not breaking below, you're not on the trade. This is interesting. It just penetrated back below and bouncing back up. So if it comes down, we have another 10 minutes. So you'll be waiting for the next 5 minutes only, because yeah, there is a chance for a drop, and as soon as it will create a new lower low, we'll be taking profit after the entry. I'm set for an potential entry if the market breaks below. I'm ready to take that move if it happens in the next 4 minutes, guys. If we get triggered in the next 4 minutes, we will be taking the trade. Otherwise, we will be closing the pending order. Even if triggers, just letting you know, even if triggers, as soon as it will drop in 1 to 2 minutes, I'm going to close before the news. I'm not gonna run this trade with the news. As soon as it triggers, just letting you know, as soon as it will drop below 30, 40, 50 pip, I'll be taking that out. It's a pretty volatile market. One single drop can move back below 100 pip. In next 3 minutes, if it doesn't trigger, then we'll be closing the pending order. I get an entry shortly after. Okay, my trade is active, guys. I'm on with the trade, and 75 pip, 90 pip, and yes, I'm going out right now, as I mentioned earlier. I've taken profit, guys. Close the trade. I've closed the trade. 170 pip. News coming, and I don't want to risk it. Might have bigger. It moved from the entry to 217 pip, but I've been able to take 171 pip. How many pips you have taken? Can you share your number of pips? That would be great if you guys let me know how many pips you have entered. I'll appreciate if you share your thought. Exit even are about 50 pip, but don't want to risk ahead of news. Yeah, that's a good idea. This is what I just 217 pip. Okay, good. Anyone has any different? Guys, if you enjoyed this trade, like this thing, you still have more to go. Now the logic, the strategy, the education needs little time. All right. So to get into the education, I have a free Telegram where I'm also sharing many of my regular education. You can stay connected or check out the website for being part of the community here. I was making coffee and missed it. That's fine. Okay, that's fine. Don't experience FOMO. Trading, missing trade is a part of trading, but that's where lies. Okay, when you enter a trade and you successfully exit the trade, that's an execution. But if you look at that, you will miss a lot of trades, and when you let them go, what you are missing, then you can keep what is working for you, right? So because it's a part of game, it's a part of trading. So anything that you are missing, even don't think about it, because what we say inside our mind and brain, it creates a FOMO. Next time it will influence your trading decision. Yes, you can't cut them all. Absolutely, you're right. You can't catch them all, but you can learn from all. All right. This is where another important thing, guys. Keep in mind that you don't have to enter a trade, but you can keep learning from each trade entry, each trade that appearing in the market. If you are using this tool, our trade engine where the trade being generated, I would encourage you to just turn it on and see those trade alert that is generated. That will give you a better understanding. So if you look at, this is an engine, this is an advanced trading tool that generates directly trade alert. Now, what I would encourage you to, even if you miss the trade, turn it on and look at the trade and why it has opened, so you have a kind of understanding of how this tool works, and you can find all information how you can access in your student dashboard. All right, so here is as I have matured in my, okay, we have 3 minutes to go for the news. By the way, we are looking at the news, and there was a, okay, so I'm ending this pool before the news, and this, interestingly, almost every day I post a pool, and you see that 58% was bearish, the market dropped, right? This is interesting. It happens over and over again. So every time when I'm posting the pool, guys, don't miss out the pool, okay? But as I have matured in my trading journey, I have more realized there will always be another setup, and FOMO is only going to lead my. This is what exactly the right way to think about missing trade. Though it is in the beginning, you may not be able to always cope with that. Okay, it comes, but once you keep practicing, okay, like whenever you miss a trade, leave the desk, even if you think that it's gonna cause you FOMO. Probably you can go to do something else. Maybe listen music like this one. Okay, coming up news in just a matter of 1 minute. Still pending here, pending here, pending here. Okay, PPI came to be 0.5% instead of 0.2%, and PPI or PPI is 0.7%. Now, how does that influence the market? Okay, there is a bounce on DXY 5413 pip. Okay, so with the PPI news, there is an initial bounce on DXY, and that has also opposite on gold, and it's significantly lower the price now. Some more music, and then we will be ready for another one. So what do you see? The data that was a bit of a jump, but CAD GDP got a little lower this quarter, 0.00%, while forecast was 0.1%. Okay, now core PPI, what that mean? Let's understand it. Release date delayed 16 days due to the US government shutdown. Okay. Change in the price of finished goods and services sold by So what that, let's understand here what that. Okay, so the PPI, how the producer price index final demand increase 0.5%. It's a huge data here. Okay. So with the increased PPI, we can see that there has been a move on DXY with this 4-hour price action here. It's trying to pull back to the upside here. Does this data is going to change the trend? Now this is the question, right? Because how does that is going to influence the overall trend in the market? This is a segregated, the information that the market might, that react, because only PPI, it's not gonna change the trend for sure. So what you could see that if you look at that DXY here, let's understand from the DXY perspective. DXY was in a bearish trend, right? Here, if you look at the daily, it's in a bearish trend. Now, what kind of structure is this from the technical? If we look at, we can see that this is bear flag. So if you look at here, from this point of view, it's a drop followed by form a bear flag. Now this bear flag also had if you look at this trend, this is support and resistance. Chances that this bear flag is going to break to the upside, but I think that potentially to trend back down. This is the technical aspect. Now DXY inherently, we can see that it's in a bearish trend, currently in a downtrend. If you look at the weekly, we are almost end of the week, right? Let's delete the lines again to see that this is the weekly price action. With this weekly significant drop, the market opened with a gap, tested the low. Now when the market come to this kind of like this, no man's land, it normally doesn't drop directly without proper pullback. What I think that the market is potentially heading towards that. So it's potentially going for a pullback, and after this pullback, the market may retest this gap and can potentially continue to drop here. So because there is a series of higher low and it created this structure, chances for it to break above before it trend below is very high. So we can look at the technical. Now going to the gold, if DXY is going up, then gold potentially to come down the middle, right? Now if that's the case, then looking at this is the XAUUSD lower time frame, the market crossed that high, and we can see that it's now slowly building that momentum back below. Okay, so the market trend, if you look at of this resistance level, it's significantly lower here at the moment that you can see, and with that downtrend, the market slowly breaking that low here and potentially to come down further back below to create a new lower low. And the market trend down, so the price still may continue to drop here at the moment, as if you look at from this high here, the price slowly breaking that low, we could see the price to come down here back below. In the meantime, traders, I hope that you enjoyed this trade that we have opened. The goal here is to trade with high probability, trade with the trend, and trade with risk management. I hope that you enjoyed this trade, and we had earlier one trade we successfully closed. This is another one also we successfully closed, and tomorrow coming up, that means tomorrow Saturday, in the premium group we will be having a Zoom session for reviewing the week and also for the next week. But if you're not in the premium, then probably you can see me. Thank you very much. On Monday again, trading live in this session. We'll be looking at here, if you look at that on Monday next week, okay, fully packed with big, right? It's coming up NFP. And if you don't want to miss NFP, then don't miss out to join here on the what is called the Telegram here. I'm sharing the Telegram link. Okay, you can click the Telegram, you can join there. And there is coming up NFP. Next week, we'll be trading throughout the week, every single day in this NY session with all of you guys. And we have opened this trade. I guess I have quite a few times explained, but still you can review this live session for more understanding and learning and growing as a trader. That being said, it was an incredible session. I'm almost at the end of the session. So whether you can, and I hope that you enjoyed, and I will see you again very soon in another session, another live. Until that, stay well, stay happy, and have a enjoyable weekend coming up.